John Darren, and I'd like to talk to you a little bit about structured installment sales. If you've got highly appreciated real estate or a business interest that you bought on a shoestring and it's now worth quite a lot, you might be facing a significant capital gains problem if you want to dispose of that particular property. There are a variety of different solutions, but one solution that we have that might be of interest to you is something called a structured installment sale. A structured installment sale is just like it sounds. Instead of receiving a lump sum of cash, you receive payments in installments. The end effect of an installment sale is that you can spread out the capital gains over a period of time. That period of time is fully customizable. However, under the traditional installment sale, there are some risks. Is the buyer going to be creditworthy for the entire length of the payment stream that's been negotiated? If you've got an installment sale that's going to go over 20 years, is that buyer going to be creditworthy for 20 years? Well, a solution is at hand. Okay, now if you use a structured sale, what ends up happening is the obligation to pay your installment payments is backed by United States Treasury obligations. And that's a lot more secure than relying on one individual's creditworthiness. So let me take you through the flow of a structured sale. A structured sale, as I said, can be fully customized. So if we refer to the chart, you'll see the first step is in your installment sales agreement, you have a sale of a property or business interest in exchange for the right to receive certain defined periodic payments. Now, these are defined in advance. They're set forth in the installment sales agreement. That obligation is then shifted or transferred. There's a substitution of obligors to a non-qualified assignment company. In this particular circumstance, the name of the non-qualified assignment company is Treasury Funded Structured Settlements International, TFSSI for short. And TFSSI is going to receive, let's say you're selling a property for $1 million. They receive the $1 million, net of real estate brokerage fees and so on. And they then send that money to a trust, actually a sub-trust of a master's trust. And the trust has been set up by a Kansas-based trust company by the name of Midwest Trust Company. This trust has been set up exclusively to deal with non-qualified assignments, these type of transactions. It's not exclusive to installment sales. There are other types of non-qualified assignments, transactions, or transactions where non-qualified assignments are appropriate, but in this case, for structured installment sales. Your obligation is going to be in a sub-trust of that master trust, and that sub-trust will actually purchase United States Treasury obligations. Midwest Trust issues a keep well agreement, and here's a sample of the keep well agreement in which they promise to have sufficient Treasury securities to back up those particular obligations. So instead of relying on, is this person going to pay for the next 20 years, you have a trust that's set up, you have a United States Treasury securities, which are regarded as one of the world's safest investments, backing up the obligation, and you can receive payments over whatever period of time you choose. Now, when structured installment sales, or structured sales as they're often called, were created back in around 2005, they originally funded primarily with annuities. Allstate Life Insurance Company was sort of a pioneer in that particular area. However, Allstate Life Insurance Company withdrew from the annuity marketplace earlier in 2013, and at this point, the structured installment sale market is primarily United States Treasury obligations. However, if you're going to sell a piece of property, the last thing you want to do is have to worry about the creditworthiness of your buyer. If you're selling a business interest, let's say you're a doctor or dentist and you sold your practice and you sold it to a younger practitioner who ran the thing into the ground 3 or 4 years after you sold it, now all of a sudden you are stuck with your practice, the one that you thought you retired from. So by doing a structured installment sale, it can add a great deal of peace of mind. We've got a tremendous amount of resources about structured installment sales on the forstructures.com website. That's www.forstructures.com. Included there is a copy of the flow chart, some of the background of structured sales and areas where it applies. So if you have any questions, feel free to call me. My name is John Darer, D-A-R-E-R, and our toll-free number is 888-325-8640. We consult with American citizens and others throughout the United States. So whether you're in California or Florida, Michigan, Virginia, or anywhere in the Northeast where we are based, feel free to call us. We'd be happy to talk to you. Thank you so much. Have a great day.